Good afternoon, Scarlett, T3 Live. Welcome to today's recap. So it's Wednesday, and this morning was definitely an interesting one. You had Apple down 7-8%. You had Microsoft down. We had our first big down day prior, and the question was, where would we hold? What type of pullback would we have? Would stocks take it in stride? And where do we go from here? So if we go right to the S&P, you'll see that all in all, after all is said and done, what did we do so far? We hit the 8-day moving average, okay, which isn't the end of the world. Look where we came from this lower pivot. So straight from this lower pivot to the upper end of the range into this spot, not the end of the world again. Just took back this last part of the move. So the question is, does it pull in further and perhaps, test lower levels? We talked in the morning call on how this would probably be the line in the sand that 2105 would want to hold-ish, or 2100 would want to hold in order to hold the top third of this range to then perhaps make new highs over the summer. For all you Fibonacci guys that like for me to show it here and there, if you take the Fibonacci retracements, which come in handy on my e-signal if I could find them. It's been a long day. You go from the low here up into this little peak, and all we did is touch the 25% zone. So right into here, you touch the 8-day and you touch the 25% zone. If this were to be the low, this would be considered a very, very, very strong market with a lot of momentum. And recently, when you're in a strong market, they don't give you that much time to buy stuff. So anyway, I bought some spiders today on the close, saying, you know what, I was short overnight, I covered. Let me be in some spiders just in case. So I'm long some spiders, and I'll see what's next with some other names, because typically I wait a little bit longer, and then all of a sudden, pow, we gap up and I miss things. So anyway, I did take a stab at a few things here. So anyway, that's the S&P. As far as the Qs, which has been very strong, okay, it too, with all of the hoopla about the big corrective move, all you did is get a move not even to the 8-day. It filled the gap, came off of it. Maybe we have a big level flag that could rebuild. Still above the prior breakout, intact. IWM actually turned up a little bit today. All said and done, some people had a nice little reversal trade, thinking that maybe with tech week, some money goes into the Russell, and you had a little red dog reversal here. Now the question is, can it build in this area? So, this is still intact. It didn't fall apart, just didn't lead with the market. The IBBs also pretty much held the 8-day, which is what strong sectors do. Couldn't even get back to the prior breakout. Green bar, small red dog reversal here too. So overall, as far as a lot of the indices look, a lot of them look still very constructive, even though everyone on TV is talking about how this is the next 10% correction, and it looks like we're back in 2007-8 again with the leadership narrowing. And yeah, the leadership has narrowed. I'm not even going to attempt to say the word that sounds like breath and bread. For some reason, it doesn't come out right. Breadth of the market isn't so great. But, there's haves and have-nots. And there's glass half full, glass half empty. I tend to be where the glass is half full. That's why I look for constructive longs. And one of those is the XLF. Look at this XLF. Gorgeous. Look at this. Held the prior breakout and, pretty much made new highs today. During that entire morning, move lower, it held in there and then broke out. So looking at some of these stocks and in the XLF. We talked about JP Morgan. Would it hold the upper area? It did hold the 8-day, and not only hold it, but led higher. Made new highs here. I did not go long JP Morgan. I've been in Bank of America since the day before earnings. So those on the VTF are having a nice time with this one. Granted, I've been out of sequence with Bank of America for a while. If you remember, this was my baby for a nice trend, which was intact. From here, you could Google Scott Redler, banks, Bloomberg. This is when we started to pretty much follow it the entire time. I had a lot of nice moves. I remember this one. Remember this one through $10? Oh, I was being the hell out of it, buying as much as I could, or something like that. Anyway, that's when it broke trend, and then it's been pretty much in a channel ever since. And then finally, after right around when they were going to report, I was like, you know what? I'm going to get long this. I do feel like it's time. It's been in this channel for a long time. It gets above 18, 1820. You go back to the weekly chart, and it looks as if there's no reason why this cup and handle type pattern, which I have in my 2015 report, starts to ignite, and we could see a move into the 20s. I didn't know how quick it would happen. It might happen sooner than I think. I thought by end of the year. We'll see. All in all, really nice move in Bank of America today. I actually added today when it took out this this spot, and I took some off, but I have more on than I had during these last few sessions. I took it into the report here, which I usually don't do, but I didn't want to miss it, and look at that. I did put on Goldman Sachs today. I think that this stock, was just, they just wanted to shake it up through earnings. It was the only one that didn't respond well, but you now have a nice bull flag inside pattern here where if the market's going to go up tomorrow or continue, perhaps you could buy more through 214.20 to make a move back towards highs. Citigroup, I haven't gone with, but we talked about that one just continuing, and it's also in my Redler access report. If you have it from there and you're just sitting in it, congratulations. This now, it's still in no man, it's still nowhere. All of a sudden you turn around, this thing's gonna, it's in the 60s before we turn around at 65. So hopefully you're in some of that nice bang for the buck there. So I'm just in Bank of America and Goldman. And then the big story was Apple. What would happen with Apple? Would it test the 200-day? Will it hold higher? Will the options guys win? And for those on the VTF, so I went long, probably around 122.5, sold into 124.50, thinking that was where the option guys would want it, because 124.50 to 125.50 was the 5% volatility move that was priced in for those taking a straddle from 131. So you put the pieces of the puzzle together, and you could have bought it when it was compelling, sold into that, and then it closed pretty well. All in all, you go look at Apple on the daily, and I think the best case scenario happened for it, where at least for an investor, it held above the bottom end of the range, closed near the highs of the day. As a trader, if it opened down tomorrow, you could maybe buy it to trade into the gap. If you're in it, I did get in some towards the end of the day. Maybe people defend it. Overall, back in the channel that has been in for 6 months. So if we could stay in here for a while and work it off, maybe there's a trade to fill a big portion of this gap where we can make some money calculated wise, and then figure it out. In my humble opinion, I think that they're going to put out some kind of bigger buyback, because the last quarter was less than the two, if you look at the stats on Twitter. So we'll see what happens there. But all in all, still in this channel, and it's really just estimates that were overhyped by analysts that kind of ruined it. But anyway, looks pretty good. We'll see. Google shook the tree a little bit today. I don't like to see this as far as something come off the highs like this. It's not the end of the world, but little red dog reversal, pushed through and failed. Did it the other day too. I don't know, maybe this is the way Google's going to trade, where you have to take your trade. But overall, still above this earnings gap, and looks like somewhat best in breed. Netflix went from red to green. That's where I made my money this morning. Then kind of ran out of gas. Still holding the earnings gap. Has an inside range. This is deemed stronger than weaker, same way as Google is, but not ready to continue. Facebook, yesterday on Twitter I talked about not chasing it. Today, it couldn't reclaim this 97 quick, but overall, did hold within this bar. I was hoping that it would get a little bit more downside to the 8-day to buy some back, which it didn't. So at this point, if it flags again and digests the move that we've seen from a calculated buy, which we had here, another one since we had here, we were also long this into that. Now if you bought the dip today, which I did not, I would have liked to, but I just didn't. Maybe next time it gets up here, it gets through that 100. Twitter was weak early on and then came back up. It's still just a laggard. If you got stopped out, it happens. But when it reclaimed this 35.71, you could have got back into it. I have less overnight than I had last night. I don't know. It's going to take some kind of news. In my gut, I really think that something's going to happen in here, or some kind of activist is going to come out and has been accumulating it. I think that it was an earnings story here, where it looked good at 50, and then all of a sudden, what's his face? The old CEO is a little bit conservative, and all of a sudden that happened. So if you got out during that, or you sold strength from when it took off here, maybe just have a little bit, or have some kind of options where we'll see where we are closer to next quarter's earnings. As far as like CYBR, was red, went green, and then sold down. Made some good money in the morning, and then I got stopped out when I left for the gym in the afternoon. Still very choppy, a laggard for now. FireEye also, pretty much a laggard still. I don't know what's wrong with both these names, but they're not really rallying the way they did the first part, and they're starting, until they reclaim these moving averages with some kind of vengeance, just be very light and take it trade by trade. You know, a lot of guys have been trying to buy the oils, and they're getting run over. I went to lunch with a good friend of mine who made a heck of a lot of money back in, you know, the cable days when like Windstar and all those cable companies wound up, you know, the junk bonds went through the roof and people were paying, you know, pennies for the dollar. I think he was even in the Siri deal, you know, with XMSR, where they bought the debt or whatever they did at 10 cents and made gazillions. And a lot of this smart money started buying Chesapeake. They didn't buy it, you know, all the way up here. Okay, you know, by the way, look when this broke the 200-day, guys. It broke the 200-day right here. Has it been back above the 200-day ever? Not ever, but for over a year? No. So this is not in a hold. You traded here and there, but that's it. And look when it broke the 8-21-day, a rule to keep you safe and out of the way. Plus, this was a little bit of a head and shoulders pattern right there. Left shoulder, head, right shoulder, and then it's just been trapped in this downtrend the entire time. So when people say, how could this happen? It could happen. So anyway, the moral of my story is, you know, a lot of those smart guys who, you know, who made a lot of money back in the day bought here, and he said during this overthrow, you know, a lot of them got hurt, you know, from, you know, big size here, thinking that they just took everyone's pain, and now it's down to there. So just keep an eye on some of these. These things are, you know, are definitely spots that if you're going to be shorted, you know, you're waiting for the juice, you're waiting for bankruptcies, you're waiting for all that stuff. That's fine, that's your game, but maybe you get some kind of cute reversal soon. So, you know, we'll see. Still no real signal. Energy, the XLE, has been in a downtrend also. You know, broke below this last level, 72, trending lower below all the moving averages. You don't need to be a friggin' genius, okay? When they're above the moving averages, which is what happened here, above the 200-day, you stay long. Then all of a sudden the XLE broke with a head and shoulders pattern too. Left shoulder, head, right shoulders, that was get out of the way. Broke the 8 and 21-day there too, and then broke the 200-day. And this also, below since above 90, it's been below the 200-day. You know, active guys get out when it breaks the 8 and 21-day, maybe even the 50. Institutions get out at the 200-day. And here it tried to get up there, and what happened? It got rejected. And now, technically, just went below another area, below 72. I'm not saying to short this, I'm not saying to be long it, but still no trade there yet. I've tried it a few times. I tried it here and got stopped out there. But better to get stopped out and lose a little than hold your nose and, you know, take all that pain. So anyway, lots of different ways to look at it. I know I was on the floor for Fox Business today, and like, what about the weakness in oil? What about the weakness in commodities? What about, you know, I'm like, okay, well, if you want to be short the names in the indices and downtrends. If you want to be long, look at the ones that are constructive. I like to be glass half full. I like to be somewhat long. You know, and you see the banks have been acting well. Some select tech has been acting well. The home builders, I'm not in them, but they had a pretty good move today. Look at the XHB, above the 200-day, engulfed the moving averages, near highs. That's something to be long versus to be short. And, you know, there are things to do. As far as IBM being back in the penalty box, you know, it failed. And it's below every moving average, and it's dead money. Intel, ever since the Altera deal, dead money. This is when it broke the 200-day. Intel broke the 200-day right there. You get out. Came back up, got rejected, lower. Okay, this is part of what your process should be. When the overall market is above the 8 and 21-day, you try and be in some kind of portfolio approach. The stocks you pick are the ones that held higher when the indices like 2 weeks ago tested the 200-day moving average, and your stocks held the 8, 21, or 50. Those are the ones that typically lead. And then you try and stay with them using a tier system as they trend, using chart patterns, you know, until that changes again. And sometimes, you know, I'm in a lot of the best names. Sometimes I'm just trying to put some trades together and, you know, just like you. But I wear a gazillion hats. I'm the offensive coordinator. I'm also on the radio. I'm also going to Fox Business. I'm also doing the morning call, the recap, writing my letter. So, you know, just because if you read my letter and there are 25 things, 25 different stock plays on there or ideas, all right, and I'm only in 4, it doesn't mean the other 20 are bad. It just means that I don't have the bandwidth to be in all of them. You know, yesterday I came in here and I was in Shack, I was in Tesla, I had all these things, you know, Google, and I couldn't really concentrate doing the morning call because I was psychologically like, oh, this sucks, you know. But anyway, so I have to figure out a way to have a happy medium, make my living as a trader, but also be able to communicate ideas effectively to all of you that get my note, that are on the VTF, that watch the Morning Call Express and the recap, and also follow me on Twitter. A lot of guys on Twitter are like, well, you didn't tweet that you bought that, but you're tweeting that you sold it, or you know, you tweeted the chart, but you never said this. I'm like, okay, well, it's Twitter. Okay, this is a free vehicle for you to get some plays and get some, you know, fish in the boat, but also learn how to fish. And if you want more, you got to see when I buy them live or take them off. You got to be a part of the VTF. If you want more than just the S&P chart or the Q's chart or this here and there, you know what? You got to get the Redler All Access that has 25 different levels and stocks with ideas. So just, you know, I'm not here to sell you stuff today. I'm just saying that, you know, I go back and forth with a lot of different people, and everyone just expects, you know, things given to them. Okay, that's not the way the world works. Yes, we try and help the greater good. There's a cool thing I saw about, I'll post a video later just about, you know, making other people money and happiness and, you know, karma and what goes around comes around. And that's, you know, I think we do a lot of that, especially me. You know, but there, you know, you got to keep the lights on. You got to keep the video player going. I got to play Freddie. You know, you got to do the editing staff. You know, we have products that go out to you in an edited fashion, packaged all pretty, so you could learn how to fish and also get the fish in your boat. And with that said, I'm actually leaving with my family tomorrow to go away for the weekend. I will be writing my note, but I will be trying to massage my positions that I have, not in front of my computer, for the next 2 days. If we happen to hold today's low and we start to head back up, maybe I'll add to a few positions where I'll put some others on, so you'll have to see them on the VTF. Maybe I'll tweet them if I can. And you know, so no more morning call for me. Tomorrow or Friday we'll probably have Rob Smith, or you'll have Dave Grieve, or you'll have Evan. So they'll be doing the videos, and then I'll be back on Monday. So it's a summer. Hopefully you're doing well. Hopefully you're trading the earnings, you know, the best you can, because it hasn't been easy. Every day there's a little different flavor. And just keep making progress, keep the frustration low, and work hard. But also work smart. Have a great night.
This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th, Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.